Markets around the world are facing their biggest challenge yet, and with 3 straight days down, could there be more to come? Today we talk about what Powell just mentioned and why we may see a way higher than 5% rate moving forward. What's that going to do to companies? And more importantly, what's going on with Tesla? It got absolutely smashed over the last 24 hours, and again, more could be coming. But with markets looking like they're facing some of the worst headwinds in a while, we also have to consider trillions of dollars of options expiration. Yes, maximum pain is coming in less than 24 hours. And funnily enough, it's reached the zone we spoke about all week. Now, will we see a switch? Well, with yields approaching 5 and of course Tesla getting dumped, we have a lot to discuss. Let's get into it together right now. Well, welcome back everybody to the Daily Show where we discuss markets around the world, including stocks, commodities, and cryptos. If you like macro, lead indicators, and of course the hottest charts, remember to subscribe and smash that alert button. Let's discuss the last 24 hours. Tesla down 9%, before 4%, and another 1 after hours. That's a big problem. Netflix was doing a lot better, 16% up over the session. But really the story is market health as a whole. Let's take a look at some of the big things that happened over the last couple of sessions. First up, only 34.5% of stocks now remain above their 200-day moving average. This is not a level we've seen since November 3rd of last year. And you can check this out on our Twitter/X account in the links in the description down below. Another one, China holdings of US treasuries. You want to talk about sell-off massive? That's what's been happening now for quite a few years, but it's accelerating at this point. And it doesn't help, and it's obviously putting a lot of pressure on treasuries across the board. We saw TLT go to fresh new lows as yields spiked up across the board. Do we have a market that is incredibly freaking out? Well, a lot of us probably are, but bullish percent index only posted its second loss in terms of the rally that we've seen so far off the October lows. And this is expected. In fact, it's expected we even come back to around this level. So what the bulls and the bears do here over the next session could really dictate whether we're actually going into some kind of October rally for the rest of the month into November, December, or whether this is part of a capitulation sell-off and we have more problems than we can think about. I even heard that there was like a worldwide travel warning being put on the world at this stage. So we'll see how that all eventuates over the next week. Pretty scary stuff. Let's get over to sentiment. It is absolutely confused. In fact, all of us seem to be confused. Neutrality went up a lot. Bullishness went down a lot. And bearishness actually kind of remained the same. Now, this is taken as of Tuesday, so of course things would have gone more bearish in terms of sentiment since then, but it's interesting to see how fast people switch. And you can clearly see here bull/bear spread has gone basically back to a zero, if not, in some ways with that neutrality kind of going to the negative side. So it's showing you that if the bulls are going to take control, what a perfect place for them to do so. We also shared over on our Twitter/X account a big thing to do with yields. This week has been a huge shift. Take a look at these dates here on the right-hand side if you pause the video, and you'll notice that we are higher for longer with less rate cuts expected. And this is just the short yields. Of course, the current discussion is actually the US 10-year, the 20-year, and the 30-year, which we'll discuss later on today. Let's also talk about pre-election years and what we tend to see. At the time of this recording, we're on the 20th of October. We tend to see a stabilization of markets usually around this time, and then we usually get some kind of rally from about this point. And a lot of it has to do with, in my opinion, maximum pain and the options expirations that we're about to see. Here is this week, 30 versus 10. It looks like we're going to put a negative in. Obviously, statistics are statistics, but usually you have positives in terms of 30 winners, 10 losses over the last 40 years with a pretty strong bullish correlation. This might be one of the first stats since pretty much, August and July that may not work. Now, that's interesting because almost every single stat we've had on the show has been almost bang on since that point. It's amazing how stats have been really holding up a lot of this year, actually, especially in pre-election years. Let's have a look at NASDAQ's Q4 rally that tends to come through. Again, there are positive correlations for the end of the year, even though it may not seem like that. And of course, we've seen similar situations like this before. And again, this is around the time that we tend to see a turn. Now, in light of all of that, what markets have been the best recently? Well, we've been talking about the short squeeze on gold, and it has been presenting and just absolutely smashing it. all of this week, it's pretty much been up. It's been up. Obviously, the Friday was a massive squeeze, and we do tend to see a lot more follow through over the next coming months from a situation like this. So I thought I'd put that back into the video. In terms of dark pool transactions and large transactions in general, we had a big one coming in for gold. And what I'd say is it's a bit of profit taking. I mean, nobody's going to begrudge someone for making about 20% in about a week. So I can see profit takers. It's a dark pool transaction. Someone has traded one of the larger gold trusts, and it's most likely a sell or a partial take profit. Let's move over to ProShares ultra short, in this case, short S&P 500. And we saw a fairly large transaction come through. Again, this could be a position now for the long side. So this is most likely an entry here to go probably against it. I would say it's some kind of take profit. They're like, you know what, fantastic. We've seen quite a few trades going through for shorts in only a few days ago. All of those will probably be taking profit around this time. And I can see totally why when we look at the charts. Again, we'll look at that very, very soon. Let's go over to unusual volume. Of course, options is the main market that a lot of people look at, and Tesla was traded pretty heavily. Interestingly, though, the call versus the put volumes were pretty even. Traditionally, a lot of retail traders have always gone the call side, and we've usually seen incredible strength in the call side, but it wasn't that way this time around. 1.68 times 90-day volume. We continue to see the Russell just get absolutely smashed with puts. It made a new low. We'll talk about it soon. But that was just, I mean, these puts, they're everywhere on the Russell right now. What kind of pressure is going on to that index? It's massive. And then, of course, we have the old TLT. More people jumping into calls than puts, and 2.44 times the average volume. Now, was it a big day? Yes, it was. And we usually see this on the Thursday. We warned of it at the start of this week together. And we see 42.7 million versus 39.16. Interestingly, still a little bit more puts than calls, but actually pretty even. You would think on a day like today that you might have seen more calls, but I would have a guess that on Friday, way more puts are going to be opened than calls. We'll find out. We'll see how it all works, but that would usually be what I would expect. And therefore, there could be a good chance there is a rally, and a lot of that will have to do with structure that's formed over the futures market and, of course, into the open itself. Make sure you're on the small time frames if you are a trader, and, of course, always practice risk management is going to be key. Let's talk about percentage of stocks above everything. Percentage of stocks above the 20, bad, 28.19. We didn't get to that recovery stage. We just missed it. Obviously, percentage of stocks above the 50, 22.4, and actually percentage of stocks above the 200 actually dropped even more after hours, 29.94 with the updated read, even from the one we shared over on Twitter and X. Let's talk about yields. It was pretty bad. They're going back to uninversion. This usually means a recession is coming. And what I mean by that is we get more of a definitive time. So, of course, everyone said, oh, the recession's been coming for 2 years, man. Yeah, that's true. But usually we never see a recession actually even being possibly called until we uninvert, until yields like go away. And we can do some timings. I will update you here on the charts. And of course, we'll update you on the channel. So make sure to stick around for that. But yes, the short date and the longer dates are getting closer and closer together. And that's thanks in part to this US 10-year. Take a look at this one. Let's have a look at the US 30Y as well. You know, people are just getting crushed on this one, unfortunately. 5.1%. Have we seen a turnaround in any of these trends? No. Will we set alerts underneath these last lows? Absolutely. And we need to be very well aware that when the trend changes, it'll be incredibly significant. And I think this trend change will mark probably the end of these yield highs. So we're going to be looking very, very closely at trend changes in the future. Treasuries did terribly. I mean, it was down 2% on the session, 82.78. To put this in perspective, Treasuries are so bad at the moment that they literally are wiping lows that you haven't seen since 2006, and they might even be going towards the 2004 lows. So these are all levels that we were looking for turns. And I guess that the point is here is that when you think about it, these little marginal differences between knowing when something is really putting in the good work and when it isn't tends to be the difference between a lot of trading. We obviously, talked about it over here, how we certainly didn't want to look at buys in this zone in particular, and then it fell through. This was a zone that we had a lot of key stuff on. We looked for a rally. We didn't see it. We're thinking about structure. Today may have ruined some of that structure, but I'm still confident that there will be some decent creation around here. And a lot of that's got to do with this increased volume spike. This is the type of thing, but you got to remember traders don't usually trade this. In fact, what it is it's usually position people. So position traders or a different type of technique is used more in these treasury bonds. So you got to be very careful. The close on the low though doesn't mark anything good for that in terms of the next 24 or even 48 hours. We'll see how it plays out. Copper sitting firm, surprising, 3.5839. No moves on copper, so very, very stable there. RSP, the equal weighted market, this is right where buyers should come back in. So we've been talking about this level, and I would like to see the buyers commit. If they're going to commit, this is the time for bulls to get back into this market. Let's update the Federal Reserve injections. Now, Jerome Powell came out and said some weird things. And in between that, it seemed to be kind of egging the market on to take a US 10-year over 5. And of course, that led to what we saw, which was an increase in yields across the board. And there were a whole bunch of other things said. But in general, you can see here that we have a fairly large drop-off in injection over the last kind of session. And yeah, we're still much higher than where we were. So I would say that still central banks are relatively supporting this market. But I don't think Jerome or anybody are that upset about trying to slow the economy still. So yeah, it's kind of working into their hands in some ways here, and we'll find out what they do. But that whole injection thing I still think is ridiculous. Dow Jones Transportation Average Index, let's take a look at this. New lows, not good for the bulls. And obviously home builders, not good for the bulls. So you can see here how important this level is. If you're taking into consideration some lead indicators such as yields, such as home builders, such as Dow Jones Transportation Average, you would have to be feeling negative at this stage. I still think, though, that we're at a very key level, but if 4,200 is taken, then this could go a lot lower. You know, we could be looking at a 4,000 handle or a 40.50 or even worse than that. So I think it's just very considered that those two are not holding up. Dow Jones Transportation Average and home builders are down, and certainly that brings the bears into question here. Let's move over to the dollar index. It's sitting exactly where we would expect it to be, which is in distribution most likely. Again, we are neutral on the dollar at this stage. Most people are bullish or bearish or whatever. We haven't seen enough information yet, and we've been talking about that for a week. Let's move over to gold. Maybe it's 2 weeks now, I can't remember. Let's move over to gold. Gold is a powerhouse, and 1974, it's coming back on $2,000 an ounce. And yeah, I mean, it's just squeezing out those shorts. Relentless squeezing. Someone is getting smashed. There's no doubt in my mind that there is a very large player getting destroyed on gold contracts right now. And that's the nastiness sometimes of the market. We obviously saw some profit taking in gold funds. So therefore, GDX was also kind of like flat for the session. But not too bad. I mean, still holding up okay around these levels and zones. US oil broke through the high. I discussed this with our community. Links in the description down below if you're interested in joining that. And we talked about the break even here, the partial profit target, or of course, you know, whatever else you want to do with it. But basically, there was an excellent trade off this. And I think that's a key point. There are good trades there. Has it turned into a swing? Well, we always knew that the swing level was down in this level. So we didn't see that yet. Could oil still be turning at this point? Absolutely, it could. You'll notice it took this high. I'm not in any oil trade now. We did have a trade in there, and it might not look like much, but again, day traders, scalpers, swing traders, and investors, it's all different types of timing and everything. I think we even mentioned it in the previous video. Anyway, with oil, we're in a key point. We're obviously seeing a series of higher peaks and higher troughs at this stage on the larger time frames. So until that changes, we can't be sure it's turning, but it's still in a critical bear zone, in my opinion. Let's move over to AAPL, probably the most important stock in the markets because it is the biggest stock in the markets. And it kind of looks weird, actually. It didn't look very good. I would have liked it to sell more during the session, get down to that 173, 172 zone, and then we could look towards actually getting a rally out of this stock. Still holding up very firm. Not a great day close for it. Obviously 2 weeks here. I'm going to set an alert above here. I think that'll be a fairly bullish move if that does happen now. But yeah, I would expect weakness into strength, ideally on something like Apple. Let's move over to Tesla though. Oh, do we get any strength here? Look, important point for it is obviously where it did pivot off. You can see it came into this doji over here and then just found that little bit of a buyer. So we can look at the small time frame structure here. This is absolutely a buy the dip. There are no reasons to get into this. Like, look at this. This is not good idea, guys. It's coming down. It's making a series of lower lows and lower highs. That is not the type of market you just want to go buy the dip. It is gambler fest. Do you want to be in a gambler fest? I don't, but maybe you do. I don't know. Overall, yeah, it just looks kind of nasty. There aren't too many reasons I would be looking at this stock just yet. If you had to, maybe you could go like 223, feeling a little bit more bullish about its small time frame with proper risk management, but there's no daily turn. In fact, at this stage, it looks like it kind of wants that 208. So yeah, it's falling. Just because it's gapped and you expect that gap to fill doesn't mean it has to. Look at Snap, look at other pairs that have happened in the past and learn from that history so we don't get smashed buying the dip. Remember, we say buy the V, don't buy the dip. The dip is bad. The dip is kind of evil, actually. It's a trade vesting technique, and it's not going to maybe some people help everyone else in the comments say what you used to do. Did you buy the dip? Did that always work out? Well, it might have in 2020 and maybe even 21, but bet you 22 smashed you around on that technique. And in general, you want to be buying recovery, not necessarily failure. So speaking of failure, here's the US 2000, Russell 2000 getting destroyed again. And this is a big close for it. Daily down here, weekly super important now. Obviously looks horrid here when we think about those 2 wicks down. And there's a lot at stake here. I think that as it trades around here, you can see we've got alerts down in these levels. We're looking at exactly how this reacts. In fact, this is a massive point for it, and I will have the patience to react to this. I think that Russell will offer amazing opportunities for bulls soon, or whenever this thing actually does get the turn in. But we will not predict that because this is horrid. Like if you saw that, I would say, well, there's further selling to come. I mean, that's what you would say, especially if you get the weekly close like this. So you can see kind of what's at stake here over the Friday. So US 2000 will be watching closely. Aussie market is actually where I like it. So this is where I would expect buyers to come in. We've been talking about this now. You might say, well, Tom, you kind of said like buyers here too. Yeah, I mean, like it's possible there. But yeah, this is usually the zone I would look for. Now, have we seen any recovery off this point? If you want to be really safe, you would say, okay, I want it to take the previous high, 7K, let's say. And then once that happens, you'd feel a lot more positive about this market. You'd be in that momentum slingshot. At this stage, well, you're not in that. German market failed. I'm just going to say out right now. That is a failure. This is technically an area that you would look towards buy-in. I can totally understand why it didn't work. I mean, obviously, we talk about Wyckoff distribution and everything. But yeah, dead. That trade is gone. No good. Would I short it here? Not really. Would I have shorted it here? Yes. And in fact, the trade was actually to short here, long here, lose the long and have the short still in. That's sometimes how it goes. You can have both ends. It just depends on your trading strat. What about CQQ? I don't know. Nothing at this stage. It's not holding up. It's not doing anything. It has some volume on it here, but yeah, just we'll update that when we see more. That stimulus didn't do anything to that market, which was a little disappointing. What about the Qs? They're back to where you would expect some kind of buying. We'll move over here to the futures market. You can see again, right on that low, so a bit nasty. And if we come back over here, this is kind of an area of interest. And the reason is because if you think about it, this is structure, and that structure kind of has a midpoint around here. So where are we? Well, we're right in that zone. Now, do we know there's a turn yet? No, because it's coming in like a freight train. So stopping the freight train might take a few hours here of futures market trading, but we will be waiting and very patient at this level to look for some type of recovery. And of course, as always, we use the SPX, which is finding the exact same zone. Good zone for the bulls to recommit here. You can see I've got this little green box. And as I come into the green box, you can see over here some demand. So this is a critical point. If you go back, watch our videos, all of us as a community, we've been talking about this all week. 4260, 4270. It's not soothsaying. It's just what we kind of thought. If we broke under here, it was highly likely to get to here. Those highly likelihoods, sure, that's great. Maybe you wouldn't have traded that. That's fine. But now we look for the structure. And sometimes that's what it is. It's about being patient, waiting for the right opportunity. Again, structural zone, key level, coming in like a freight train, going to be a bit hard to stop it. I think we'll find out quite a lot. But do remember, max pain is also something that we can talk about. So what have we got? Well, we are far away from max pain now. In fact, max pain, I believe, went to 434. So basically, we have max pain sitting up in here, and we're here, and there's trillions of dollars at stake. I don't know. Maybe Wall Street wants the lobster. It is the 3rd week options expiration. That doesn't mean that it is guaranteed. It is never guaranteed. There are no things such as that. It's just a stat, yeah? So when we see these levels, when we go, oh yeah, we like this zone, it's all about putting together the final pieces. We talk about it in our day trading masterclass. Yeah, plug, links in the description down below if you're interested. And that's how you actually create structural zones that are replicable in these areas. But we are at a key point, and I think it's going to be very close between the bulls and the bears here on the Friday session, regardless of the overall macro, which obviously looks super negative and bearish, and of course the market, which is doing its own little thing and detached from some parts of reality. So if the buyers are going to come in, if the stats are going to start playing out, we're in that weak kind of area for it to occur, and of course we're in that key zone. We will need structural creation, though, around this point. Let's talk about max pain again. 434, puts sitting all over 420. We estimated this week that we would sit between 420 and 440. Yeah, I know, not that impressive, but that's obviously what we have done. And we're kind of been to both ends in some ways. So we're sitting around the right area, but 434 is the max. So we're sitting at 425.90 at the time of this recording. Still trillions of dollars of options outstanding. So a lot at stake. If we go over to crypto, it is still boring in my opinion. Obviously, Bitcoin is still in the theoretical long. Ethereum, I still think, has horror chart, but we'll find out how it plays out. And we'll update you if there are any updates to be had there. And in terms of news, we don't really have much. We've just got some retail sales Friday, October 20th. So Jerome Powell was the big one over the last 24 hours. And yeah, I mean, basically Jerome just gave the green light to keep pushing yields up as much as possible. That's probably one of the main things that was kind of going on. And in this stage, we don't really need to interpret what Jerome's saying too much because it's not going to help us necessarily. We just need to follow what the price action is telling us. And we are at a very important point for the US 2000, S&P 500, and obviously therefore the NASDAQ. Stay safe out there, guys, and make sure to practice a ton of risk management in times such as this. We knew it was going to be a wild week. It has been 3 days down. Historically, that usually marks a bit of a turn. I think there are some stats around that. But again, it's all about risk management. Thanks very much. Subscribe if you enjoyed today's video. We'll see you in the next one. Bye for now.